Starting a side hustle is a great way to bring in some extra revenue for your family. But whether you're doing it purposely or by accident, if you're a content creator, some sort of business consultant, drop shipping, or selling things on Etsy, if you're bringing in revenue, you need to make sure you're paying for the right amount of tax. And in this episode, I'm bringing in my buddy, Paul Falewicz, who's a fractional CFO and the guy I go to with all of my tax questions to talk through how small businesses and starting businesses can make sure they're setting themselves up for success when they start bringing in money so that they're paying the right amount of tax and expensing the right amount of things so you don't get in trouble. Stick around. Paul, thank you again so much for joining our episodes here of Business Over Brews. We're really excited to have some awesome tax and accounting questions to run by you here. Could you tell everyone a little bit about yourself, how long you've been in the business, and your specialties?
Sure. I started right out of college working in accounting and finance back in the mid 90s. I don't want to show my age, but mid 90s, we'll leave it as vague as possible. Worked my way up doing credit and collections, calling people on past due bills. Worked my way up through the accounting side all the way to a CFO for my last corporate job. And about 7 years ago, left that corporate job and started my own business. And started working with small business owners, just getting them an understanding of what's going on with their financials, kind of pointing them in the right direction for cash flow and profit, and kind of a part-time psychologist at the same time because money does affect people in different ways. And my niche is kind of that small business side. Usually under 20 employees, they usually don't have a full-time finance person, but they need some sort of support. So that's where I'm stepping in and helping them out. And again, just making sure that these businesses are staying financially strong, moving in the right direction, making the right decisions so that they can get to whatever goal that they want to within their business.
Nice. And I can't recommend you enough. When we started working together, I was in between starting a business. I had been laid off, working through unemployment, and I just remember trying to figure out all of those implications of how do you properly track cash flows and whatnot. I wouldn't have been able to do it if it wasn't for you to help me with all these filings. So again, thank you for all the help you've given me over these past several years here. What I'd love to talk to you about is a couple of things related to starting a business. When I started my business, even though it's a small business and it's more of a hobby in a way of a business where we try to earn some money just to make some fun out of it, of course. There are a lot of challenges and constraints being a single business owner. You're the one providing the service. You're the one managing the payroll, the profits and losses, the advertising. And I'd love to ask you, for those that are considering starting their own business, and especially nowadays with the ideas of influencers, almost anyone can start and has a side hustle. What are some of the things you'd recommend someone starts thinking about day one before they start transacting and accepting cash for services or products?
The biggest thing that people sort of forget about is the investment that's going to take to get a business off the ground. Some businesses you can spend $5 and you can start making money day one. Some other ones you might have to spend hundreds of thousands of dollars to get the business off the ground. It really is that financial consideration as well as the time it's going to take to get the business off the ground. Most people, again, have a good product or service. There's other competitors out there, other people doing similar things. You need to find your little niche within that industry to be able to be a little bit different than the person down the street, and also understand that after day one, you're going to have a lot of headaches. There's going to be a lot of issues. There's the things that you never even thought of that are going to come up. And as a rule of thumb, and this worked for my business, and I've seen this for several other businesses, after day one, if you're still standing and willing to do it day two, you're probably going to be successful over time. It's the people that give up when, adversity hits them and they're not able to be successful and just not able to understand what that long-term plan is. But most businesses, it takes a good 18 to 24 months to get a business off the ground and to get people to see you, people to understand what you do, and then more importantly, people to pay for your product or service. That's the biggest thing. I tell people all the time, the deal is not closed until you get that final payment. Once you get the final payment, you're good. And that's what people forget about because we're not all charities. We all, even if it is a side hustle, it is some extra pocket money to go on vacation or take the kids out for ice cream or some fun activity you're going to do with the family. You need to be paid for what you're doing, and that's what people forget about all the time is that they'll provide the product, they'll provide the service, and then the person never pays them for that, and then ultimately it's almost as if the sale never happened because they've never been paid for their stuff. And again, we're not all charities. We all don't have a famous last name where we have unlimited access to money and can try different things, and are able to drop large sums of money without kind of blinking. But most people, every dollar counts, and you want to make sure that those dollars are spent the correct way, get the business to where it is, and then feel comfortable with what the business is doing, and again, make money at what you're trying to do.
Yep. And that makes sense. And so that brings up a couple of other topics here. One of which I think we'll focus on based on your specialty. But yes, let's say we're providing a service or a product. There's one side of it where there is the requirements of providing that service to a satisfactory level, that someone is not injured or hurt or has claims against that business. That's more of legal liability and whatnot. But then the other side of that is now you are starting to receive funds. You are receiving earned income for the service you are providing. And it's not as simple as just taking a handful of cash and now that is mine to keep. If you're trying to keep a serious business that's going to grow and have longevity, you need to put certain controls in place to make it work and scale. What would be some of those challenges you see that businesses don't set up right away that are kind of easy, and not to say easy, but should be considering to make sure that they are not really causing bigger problems further down the road?
Ultimately, for every dollar that comes in, you don't want to be sending out $1.10. So you don't want to be kind of falling into that negative of overspending. There are things that you will need to invest in order to get the business off the ground. So early on, it's tough to follow, but ultimately what you're trying to do is trying to, for every dollar that comes in, maybe spend 90, even 80 cents of it and put some of that into a savings account. Kind of, hide that away from the everyday business stuff and use it just in case of an emergency. Use it for that big purchase that you need to buy. There's, every industry has different things you might need to buy. A lot of people need computers, so that becomes a large purchase that people need to make in order to run whatever business that they have. But it's just kind of that overspending and throwing a lot of money away early. I try to really caution people to kind of take baby steps as we go, not to overspend early on, spend what you need, and then buy what you need as you go along once the business becomes established. Because I hate people to spend $20,000, $30,000 on a business and then realize it's not something they want to do, because then that money is gone. Some of the items you might be able to use on your personal side, but if you had to buy three computers, most people aren't going to be able to sustain three computers and use them efficiently. But I try to tell people to kind of take baby steps before they start walking, before they start running. And then when the business is up and you're in a full sprint, that's when things are going well. And hopefully the financial side is working itself out. But to kind of take it slow, sleep on some things, don't make a decision right away. Some things seem great in the moment, but you sleep on it, you wake up the next day, and unfortunately, it's not the right idea for you to do or the right way you to do it. But then you kind of say, okay, I'm going to do this in a different way and sort of pivot a little bit and feel more comfortable with something else. So it really is just kind of taking those baby steps first, and then eventually, once things are going and you're in control of what's going on, you'll feel much better about it. But it's just kind of taking that slow, steady progress, which will get you ahead longer. Most people, again, in these days want stuff instantaneously. I say just take a couple days. You don't have to take months or weeks. It's take a day or two. It's not gonna make a difference in a day or two with whatever decision you're gonna make.
No, it makes sense. And it's, you want to make some money. And actually, this kind of opens up another question. You're bringing up good points. You want to make sure that you're earning more than you're spending and so forth. But then I'll be honest, you're on TikTok. I'll be on Facebook looking at what would be considered all of these financial gurus popping up with these business strategies and advices. And something they always talk about is, or bring up as these strategies comes to expenses or not having income for the reasons of offsetting taxes and so forth. And I feel like that yes, there's value in, of course, making sure that you are paying the right amount of tax, that you are not overpaying or underpaying, because you want to make sure that you're paying the right amounts. But you do want to make sure that your expenses are properly allocated for. Do you have any comment about that? As these folks are saying, "Oh, try to make it look like you don't have money, even though it is sort of legal." How would you approach someone whose goal is maybe, do I not want to make money to have to pay tax, or how would I play that balance and strategy?
If you look at owners of professional sports teams, and I'll use the NFL as an example. Here in New England, we have the New England Patriots, and the owner owns another company that he made all his money from. The Patriots, on his tax return, and none of this is public, so we don't really know this, but this is just an assumption I'm making. The Patriots usually overspend because they're trying to get a product out. They're trying to, obviously win Super Bowls and be successful. But ultimately, there might be what we call in the industry a loss leader, which means the Patriots bring in revenue for ticket sales and merchandise and everything they do, but then they pay players, they pay staff, they pay all their expenses. They might not be making money, but then he has another company that he's making money with. Between the two of them, kind of offset each other for his taxes that he's not overpaying on the tax side. So a lot of people try to put that stuff together. For some people, it's easy. For other people, there becomes an issue because then whatever money you're making on your personal side or in your first business, you're basically just kind of losing in your second business. So if you have the cash flow to do that, that makes sense. A lot of people don't have that extra money to be able to do that, as well as there's an IRS regulation where if you have a business and you lose money 3 out of 5 years, the IRS could deem your business a hobby, which means you cannot have those losses anymore. So it's very rare that that stuff happens, but if people do take advantage of it and really are, not paying attention to what's going on and trying to run a lot of money through those losses, the IRS could stop that after a couple of years, and then you don't have that ability anymore. And then another little disclaimer that I've seen on, because I see all the people on all the social media stuff, a lot of the stuff they say is right, but in a 30-second snippet that they do, you can't get the full picture of really how that's going to work for you, which is, again, a sales technique of every single business trying to sell their products. Because, again, the IRS regulations, anyone can read it. If you have, 3 days of doing nothing and you want to read the IRS regulations, go right ahead. You'll probably fall asleep a couple times. It's not the best book out there to read, but everything is public. So there's really nothing that people are bringing to the table that someone else can't do the same thing for. So I just caution people to look what's best for them. Think about today, but also think about tomorrow, because the decisions you're going to make today obviously affect tomorrow. And you don't want to lose everything today and then have to pay taxes in the next year because you don't have those potential write-offs that you took in the first year. So everything that they say is true. It's just they're only giving you about 2% of what really has to happen at that point. And then talking to someone or doing your own research will actually figure out what's going to be best for you, because there is no one size fits all for every business or every situation. You need to figure out what's best for you, because that's really what's going to get you to sleep at night and then not be in the crosshairs of the IRS, where they are coming and making changes to you, or taking things away that you thought were going to be legitimate.
So pretty much, I don't want to be claiming 10 or 20 grand of income and 50 grand of expenses multiple years in a row is pretty much
Yeah, there's only one exception to the rule, which is I believe horses, something to do with horses, and there that you're allowed to do it 5 out of 7 years, but for the most part, it's a seasonal thing where it's up and down, where they give a little bit more latitude to them. But the IRS will, you just don't want the IRS, they should know about you. You should just kind of be a number that they see every year and go through. The minute that you're on their desk and they know you by first name, then usually things are not going to work out in your favor.
Nope, that makes sense. Well, I'm not buying any horses, but for those of you out there, there could be a lucrative opportunity there for you. So, the example you brought up, Patriots, crafts, the way that they potentially handle their tax structure, awesome for them, but probably not as aligned to like the folks that we're speaking to here. So I'd love to ask a question that would be a little more aligned to the audiences that we have here. So let's say we have audiences starting businesses. Maybe they're doing something that is low cost of business, right? So they are maybe a content creator where they buy some equipment that could be expensive, but the rest of that time is the rest of the costs are really around time and production, right? So like minimal, lower costs. Or someone who's doing landscaping and they have light equipment, big upfront costs, not too many recurring costs for them. When they start earning these types of funds, and let's just say these folks are a little less concerned or are fine with what money they are making, they just want to make sure they're earning it accurately and correctly, like a hobbyist or someone with a side hustle. Are there any steps you'd recommend someone to take? So before I start creating, things on Etsy or carving things out of firewood that people buy online from me, what should I put in place before I start really accepting payments and facilitating these transactions? Is there anything I should prepare for?
Yeah, I recommend people have a separate bank account for their business, even if the business name is not on the account. Something that's just dedicated to the business, that you're collecting the money when you start to sell your product. and then something that you can pay your expenses from as well, so that it's all separated. So you get a good understanding of what you're spending. A lot of people will just take out a credit card, take out their debit card, and pay for something, and forget about it to put it on their tax return at the end of the year because it was something in the a sale that they saw or a heat of the moment decision that they made to buy something, and then later on, you're doing your tax, and you're like, hey, it looks like I made $5,000 last year, but then you forget that you spent $10,000 of personal money that didn't get associated with the business at that point. So I always just tell people to kind of separate things as much as they can. The good thing about it is usually bank accounts are free with most banks now, so you can have multiple bank accounts. You can keep track of things. They'll give you a debit card. When you go to the store, you bring out one card for your personal purchases, and then you do a second transaction with the second card that then will be for the business side. And then you have a separate statement. You have separate tracking for those expenses so that you're never surprised at the end of the year to think, wait a second, I thought I made some money, but then the numbers are kind of showing something different. It just gives you a little bit of peace of mind. I tell people to do the same thing with a credit card if they don't want to put stuff on debit cards, because again, there are some holds and things that they'll put on cards depending on amount of level of purchases. But just to have everything separated makes your life a little bit easier, for especially people who are non-financial, that are starting a business and are very good at doing something. This just makes it a little bit easier to kind of separate the two things. You'll get separate statements. It will make you kind of look at it and think about it, and then eventually you'll be able to have hopefully a lot of zeros in that business bank account if the business takes off the right way. But it at least gets you a separation between the personal and the business side, and not forgetting about expenses that again will help with tax deductions at the end of the year.
Yeah, and that's where this area is where it even gets people into further trouble too, which is the idea of what can and can't you deduct. And not that I want to go through an extensive list, but like I wanted to share an example that my wife and I just did this weekend. So like, for example, people will hear oftentimes people touting, oh, I can expense this. I got a meal here. I bought that car. I bought this gear. And yes, that's viable, assuming it's an actual business expense. But for example, like if my wife and I go out to dinner and just happen to talk about the business, I'm not swiping the business credit card for that dinner. However, this weekend, my wife and I had a client session up in Gloucester. So we're up in northern Massachusetts over by the water, a couple hour session. And after that, we ended up grabbing a dinner, which I did use that card to pay for dinner. And so based on my assumptions, because we're there for the business reasons we needed to eat anyways, I'm under the conclusion that that is an okay expense. Did I make the right call, or do you think I have to be very careful here how I'm doing this?
No, that's the right call, for a sole proprietor, for a business. If you're on the road, the business is considered the meal is considered a business expense at that point. Where people get in trouble is 7 meals a week that become business, and that's usually not the
Yeah.
case at that point. But if you're doing it once a week, maybe twice a week, that is acceptable. It's if you bring in the kids and you bring in your in-laws and your parents and things like that, it starts to become a little bit more gray at that point to say that that's a business expense. But
Yeah.
if you guys are on the road doing business related stuff, any expense that is business related again is going to be a business write-off. So a meal, if you grab something because you're on the way to the client's site and you grab something on the way, that is considered a business expense. It's the minute you come home and you grab some food for the kids and you grab some food for someone else at that point that is not business related, that's when the IRS will step in a little bit and say, hey, this doesn't quite make sense. Ultimately, the easy rule of thumb is, again, if you're on the road doing business, it is a business expense, and the IRS just likes to keep the receipt so that you can document what you did at that meeting, what you talked about. It doesn't have to be the entire 60 minutes with your significant other that you're talking about business. It could be just a couple minutes, but usually most times that's going to be a subject, especially if you're on the road, doing something business related. That's going to be the topic of a recap or something that you're kind of pre-playing to say, this is what we want to do and what we want to accomplish in the session that we have. So it just makes it easier that way, just to kind of document that stuff a little bit. It doesn't have to be a narrative of 53 minutes of this discussion, full 4 minutes of this. It just has to say we talked about, the planning for the session and what we did. And again, if you have that in your business account, you'd have potentially some miles, some other business expenses that you'd be taking, especially if you have to stop and pick up an item that you'd have to bring along to help with that session. So anything again business related that you're talking business or working business related is much easier to justify as a business expense, except just swiping the wrong card when you go and get ice cream with the kids or something. Then that's when the IRS is going to step in and say, wait a second, this doesn't make sense. And
Yeah.
that's not a valid business expense.
No, that makes sense. And so it's funny as we're talking about this, one of these TikTok gurus, there was a video I caught that has stuck in my mind because it just didn't make sense to me. I'm not going to say the person's name, but I remember they're talking about how smart they are with their money, and they made a comment saying, "Hey, beginning of the year, as we're earning money, I knew we were going to earn some money that year. So it's like, I went and I bought a Lamborghini for the business. It was some high-end car, or actually it was like, might have been a G-Wagon, because I guess there's a tax implication that over a certain amount of weight in that vehicle, you can then depreciate the entire vehicle in the year. That's at least what was explained. And they're all kind of laughing about it. And then at the end of the video, he says, and then at the end of the year, I sold the car and got most of my money back. And then they all have a laugh and it ends. And in my head, I'm like, yeah, but if you sold the car, then that's income earned that you then have to claim. You didn't really alleviate the tax. Like, that doesn't seem right to me. Can you explain that?
Yeah, I tell people all the time, your day-to-day car that you use can be used as a business write-off, but it's never 100%. So only people that have really heavy equipment or trucks that are dedicated towards the business can usually get away with that 100% write-off for the car at that point. The minute that you veer off and grab groceries on the way home or grab dinner for the family, you're off the clock at that point, and that's not a business expense. So I usually tell people there is about usually 70 to 80% is a good rule of thumb, that usually you're on the road enough for business, if you're, especially if you're going to see clients and working out of not in your home and going to their sites at that point. 70 to 80% of it could be business related, but the minute you veer off and grab groceries, or the minute that you go someplace that's not business related, it's never there. A front loader, a big heavy piece of equipment, again, 100%, because you're not going to be putting a car seat in the back and taking the kids and getting ice cream, or doing anything personal at that point. So those ones are
Maybe.
easily 100% write off, and personal ones 70%. But it's just a matter of, there are so many apps and there are so many ways to kind of keep track of miles and time spent in the car, that you can kind of estimate if you had 10,000 miles over the course of a year, and you can justify and you kept track of it, and you have 7,500 miles that you spent, then obviously 75% of that time is spent business related. But usually personal cars run into problems that it's never 100%. You can take that percentage of the depreciation, and you can take that percentage of expenses during the course of the year in that example that you brought up, that they can do. But they would have had an expense at the beginning of the year, and then they would have had an income at the end of the year. The two of them potentially might have been offset, because again, the minute you drive a car off the lot, obviously depreciation and value goes way down. So it might have worked out for the numbers for that particular situation. But I just tell people, as a rule of thumb, it's never 100% within their business for a car, but it could be anywhere from 75 to 80%, depending on, again, what they do. If you're working from home and you never visit clients, then obviously it's a different story. But again, everyone's situation is slightly different, and you got to find what works for you. And again, not set any red flags off of the IRS, so that they're coming and checking and seeing what's going on.
Which is exactly why I've been working with you to keep us in line where we need to be based on the projects that we're doing. It's so kind of honing us back into these businesses. People may be doing these side hustles. They want to make sure that they're doing things accurately, so they're not going to get in trouble depending on how they bring in funds and whatnot. What are do you have any top common mistakes that folks just starting in trying to get things organized? I know we talked about, a couple of ideas of what to focus on. What are the top biggest headaches you see people coming into you with that you realize could have been addressed if things just were done appropriately the first time around, instead of fixing something later on?
Yeah, for the most part, it's just not keeping track of what they're spending on the business. So, a lot of people come in and say, I didn't make any money on my business. And I actually had an example of this a couple months ago. Another tax person, said that this company made about $100,000 in their first year in business, and she goes, I don't have." I asked where the money was. She goes, "I don't have one dime of that money." So what we ended up realizing, when we asked a couple questions and started digging into understanding their business and understanding what they did, the other tax accountant just never asked any questions. It just took her numbers to be basically the truth at that point. Where I asked about three questions, visited her on site, and I asked, I said, I don't see any of this equipment and any of these items that are in this. Actually, it was a beauty salon. I didn't see any of the chairs, any of the tools of the trade that they do to work every single day. None of that stuff was in her numbers. And she goes, "Oh yeah, they never asked about that." And I said, "I could easily see about $100,000 investment that you made to get this off the ground, because again, they had a build out. They had to put in 6 or 7 chairs. They obviously, it doesn't. I don't. You go to beauty salons obviously for obvious reasons, but um, you know, uh, all the different equipment, the hair dryers, the combs, all the scissors, all that stuff, none of that stuff was captured as a business expense. So, but the tax accountant never asked about that. And I could clearly see in less than a couple minutes that stuff had to be added on to get them correct. So by asking those questions, we ended up amending their return and getting it to be the right number, because she said, we spent a lot of money to get this off the ground, but now I have to pay this large tax bill, and I don't feel like I made that money. And I said, I agree. You definitely did not make that money. Hopefully in year 2 and year 3, things turn a lot more positive, which is what they're starting to do within the business. But, day one, there was at least $100,000 investment that the previous tax accountant just never asked about, and then never documented. So I just tell people to keep track of everything that they're doing with the business. And what I do is I just start asking questions. We deal with so many different types of businesses. There's a core for a lot of the business that are really the same. So you can ask the same type of questions, but you kind of have to, depending on the industry, frame them different ways. But you're able to get that information from the owner. But the number one thing is just people just not keeping track of their expenses and not understanding what they spent to get this off the ground and what they're spending day to day. Because then the second question becomes, this is what it costs you every day. So to turn the lights on, turn the heat or AC on, depending on the time of the year. Everything that they're doing, there's an hourly or daily cost. That's then what your pricing strategy becomes then to start to make money at that point. Because again, as we talked about earlier, if I'm charging you $1 for my services, yet it's costing me $1.10 to get there, I'm losing money. And unfortunately, that business is not going to survive unless I have really deep pockets and friends and family that are willing to give me the money to make it go. So we work with them to try to figure out what that pricing is to make sure that they are pricing everything correctly to make money. Again, levels of money that you make are different depending on industry and different things, but you want to at least get to a break even status pretty quickly and then start to make profit after that.
No, absolutely. All coming down to where's the money going, track the money, stop losing the money. I've heard that before. Step one, don't lose the money. That's a tagline from someone. I'd love to finish off here with a couple of, they're kind of the same question, but I guess we talked a bit about what the IRS red flags are, but the big question is, how do I make sure I don't get audited? How do I make sure I'm doing things correctly? What should I avoid? And what's going to cause me to immediately get audited? What would you recommend folks do to make sure that they have the smoothest filing experiences out there?
What I tell people is this comes down to common sense sometimes. Is not in the Lamborghini example earlier, not buying a $100,000 Lamborghini and just writing it off within the business and then having no business really to write it off with. So, it seems like common sense. Some people will follow, bad advice or just think that they can outsmart the IRS at that point. There are things that we can do that are legal and within the IRS regulations that could work in your favor, but ultimately, me personally, it just comes down to things that you kind of look at them and you're like, wait a second, this makes absolutely no sense. But and I always ask them, it's never when you work with the tax preparer. The tax preparer's job is to ask the questions, get the information, do what they need to do. However, if the person doesn't give that tax preparer all of the information, it still falls upon the individual that the IRS will come after the individual. They don't come after the tax preparer at that point. So what I try to do and work with my clients is I try to ask those questions and make sure that they have an understanding of what's going on and there's nothing that's going to be set off as a red flag. So, we don't want to, pretend that we have 25 kids as a deduction. We don't want to pretend that we have, 7 family members that we're taking care of and we live in this little 1,000-foot apartment. And, we try to use that common sense to not set any red flags off of the IRS. Again, there are a lot of different things that people can write off as part of business expenses that are used on a daily basis or yearly basis for their business. We just don't want to be able to say that we have 100 of those expenses every single month that you're not taking advantage of because you're trying to pay it for a family member or trying to do something else that is going to be there. And the IRS has, every company usually fills out a data census every year for expenses within their business. So the IRS and the government has all this information that they know this is a typical business expense for this type of industry. So if you're in one industry and then all of a sudden you have 5 cars, but you're not repairing cars or in the car industry, the IRS looks at it and goes, wait a second, this quite doesn't add up. Let's do some more investigation. So we just try to make sure that the common sense is there and people are doing what they need to do in their industry and not, causing issues that the IRS is looking at you at the top of the line. If you kind of go through their computer systems and the return gets processed and you never hear from them, then that's great. We just don't want to be the ones that, they're coming back and saying, hey, you need to justify these 5 cars in your business and you work from home, you never visit clients. Why do you need 5 cars at that point? Because there's no way that you're going to be able to substantiate that expense. And it's definitely not something that is really needed for your business.
No, makes sense. Paul, this has been amazing to talk to you. Thank you so much. If people have questions for you, how can they best get in touch with you?
Best way to get in touch with me is either through email or phone number or my website. Email is just my name, paul.falewicz@cicentrix.com, or everyone can reach out to me via my phone, which is 978-987-3200, or just Google me, and I'm out there on all the social media stuff and always happy to talk to people and, have that common sense conversation with them.
I love it. Paul, thank you so much for joining. I'll probably be reaching out for another episode soon enough. This is absolutely fantastic. Thank you again.
Thanks for the time.